So good morning, at least West Coast time. My name is Jennifer Walske, and I am a faculty here at UCLA Anderson, really focused on the area of impact investing, which has been both my research and teaching. We're really thrilled to co-sponsor this with Impact at Anderson, Net Impact, and our own investment group, Anderson Venture Impact Partners. It's such a pleasure to have you here today, Sir Ronald Cohen, or as we will refer to each other in this interview, Ronnie. Just a brief introduction of Ronnie. Ronnie is the chairman of Global Steering Group for Impact Investment and the Portland Trust. He is a co-founder, director of Social Finance UK, USA, and Israel, and co-founder of Bridges Fund Management and Big Society Capital. For nearly 2 decades, Sir Ronald's pioneering initiatives in driving impact investment have catalyzed a number of global efforts, each focused on driving private capital to serve social and environmental good. These efforts are leading to global impact investment movement towards what you like to call in your book an impact revolution. He chaired the Social Impact Investment Task Force established under the UK's presidency of the G8, when it was a G8, from 2013 to 2015, the Social Investment Task Force from 2000 to 2010, the Commission on Unclaimed Assets from 2005 to 2007, and then in 2012, he received the Rockefeller Foundation's Innovation Award for Innovation in Social Finance. Ronnie's done a lot. I have a couple more paragraphs, so just stay with me. He co-founded the executive chairman of Apex Partners, so he really brought actually venture capital to the UK from Harvard Business School. He was the founding director and chairman of the British Venture Capital Association and founder and director of European Venture Capital Association, which I worked also with in my research. He's a member of the board of dean advisors at Harvard Business School and the vice chairman of Ben Gurion University, former member of Harvard University Board of Overseers, a former director of the Harvard Management Company and the University of Oxford Investment Committee, a former trustee of the British Museum, and a former trustee of the International Institute for Strategic Studies. He's a graduate of Oxford, where he was president of the Oxford Union and served as an honorary fellow of Exeter College. He was an MBA from Harvard Business School, to which he was awarded the Henry Fellowship. He's the author of several books. In fact, that's one of the reasons we're also here today, is to talk about his most recent book, which is called Impact: Reshaping Capitalism to Drive Real Change. Sir Ronald Cohen, or Ronnie, lives in Tel Aviv, which is where he's joining us today, London and New York, with his wife of more than 30 years, Sharon Harrell Cohen, who is a film producer. They have 2 children, Tamara and Johnny. So, Ronnie, it's so nice to have you here with us today to be able to have this conversation about sort of the future of finance, impact investing, and hopefully some real positive catalytic news on what has otherwise been a somewhat difficult year with the combination of economic collapse, COVID, a lot of social injustice. It's just been a very unusual year that we finished out in 2020, and we're looking forward to some path forwards here as we look into 2021. So I wanted to actually start with that. And, in your forward of your book, and by the way, this is a picture of the book, although I think Ronnie would encourage you to download it, to save paper and download it, but actually have a hard copy. You speak about the impact of COVID. What do you think the pandemic has done to amplify some of these societal issues and societal divides? And then what kind of opportunities does that bring for systemic change?
So, Jennifer, first, let me start off by saying how much of a pleasure it is to be exchanging views with you and everyone at Anderson. I know that you've been thinking and working in this area of impact for a long, long time. And I'm delighted that we're speaking today because the world is in great need of impact thinking, of impact investment, and so on. I think COVID is accelerating the progress of impact. It's shaking up our habits and beliefs in ways we couldn't have expected, and it's leading a lot of people to question our system, which is really the core proposition of my book. And we see the system being questioned both from an economic point of view and also from a political point of view. So that democracy is being called into question as well as capitalism. And I think big crises do create the most powerful opportunities for bold change. And we're on the threshold of such change, I believe.
So, some of the early data, you and I talked about this a little bit before, but from the UN is that, for example, with healthcare or with education, 90% of the children around the world have lost a year of education. And we're even starting to see, and by the way, Israel's leading in vaccine distribution. But if you look globally at vaccine distribution, it's only been amplified, sort of the have and have nots, who gets access, who doesn't, and how is this going to play out on a world stage. But you've seen some real positive impact from specific social measurements. And maybe we could talk about that. You've now formed a group to look at this overall. There's been some questions, it came out of the G8. Could it be a UN effort? How do we broaden this collectively to really harness the power of finance for social good? Can you tell us a little bit about some of that work and how it's been evolving?
Yeah, we're living at a period that's very similar to the time when I was at business school and saw the arrival of venture capital and tech entrepreneurship, and of course entrepreneurship in general at the end of the 60s. And what happened then resulted from two major changes: the arrival of technology, of course, but also the arrival of risk measurement. And many of you won't be aware on this webinar that at the time when I kicked off in 1972, after leaving business school to create what became Apex Partners, the average investment portfolio involved investing in just two securities, the stocks of a national stock market and the bonds of the national government, the investors' stock market and government. And the arrival of risk measurement transformed investment portfolios because it brought with it the understanding around risk-adjusted returns and diversification. And when you understood that you could include in a portfolio securities whose value would increase faster and therefore would give you a higher return despite the higher risk they involved, like investments in venture capital, you began to think completely differently about the structure of your portfolio. And it shifted us to include venture capital and private equity, where I made my career. And venture capital, I don't need to tell you that, at UCLA, funded the tech revolution, but it also opened the door, Jennifer, as you well know, to investment in emerging markets, and so funded globalization. We're living at a similar time now, and there are three forces coming together this time. The first force is a change in values, which your younger colleagues are leading, to purchase only the products of companies whose values you share, to only work for those types of companies. And that's happened primarily over the last decade and a half, and has made investors very much aware that their portfolio returns are going to be affected by these changes in values. So we have that major trend, which has driven now $40 trillion of investment, ESG investment and impact investment, to achieve more than profit. This has met with a second trend, which is the advance of technology to very powerful artificial intelligence, machine learning, augmented reality that enable us to deliver impact globally in ways that we'd never been envisaging, and that's been accelerated by COVID. This webinar is certainly evidence of it. And the third is the heart of your question, which is a breakthrough in impact measurement. rather like risk measurement, change portfolios, impact measurement has already begun to change portfolios, except that measurement at the moment, most of that 40 trillion, almost all of it, is invested according to very vague data from companies. And the breakthrough that has come now is to measure the impact of companies in the same way that we measure their profit, in dollar terms, their environmental impact and their impact on people, which companies create through their products, their operations, and their employment.
So let's talk about that, because I was gonna get into that question a little bit later, but I think we should go and jump into that now. And that's in chapter 6 of your book. You talk about, the 9 things that governments can do. And number 1 on the list is that government should require companies to measure their impact. And clearly there have been issues around self-governance when it comes to the banking industry. That's why we had the meltdown on the financial crisis in 2008. And that led to some regulatory changes. And being, a former investment banker, I remember when Glass-Steagall came in, and then is it enforced? Is it not enforced? And sort of some of the whipshaws that happen around that. Is this something that you do believe governments have the ability to lead in? Is this like a EU effort? So you have collective action? Because the UK has done this across governments. Or is this something that, stakeholders and shareholders should just start demanding this kind of transparency from the publicly traded companies themselves and drive that behavior through that mechanism, or maybe both, right? But how do you see this playing out?
Wonderful question. So let's just peep into what this impact transparency means. And I'd like to take you all to an effort at Harvard Business School, which I'm privileged to chair, called the Impact Weighted Accounts Initiative, which is seeking to do what I've just described, to reflect all the impacts of companies through their financial accounts. We've published the environmental impact created by 1,800 companies. And if you look at those companies, they're public companies which have made information available about their environmental impact. And we've chosen the metrics, tons of carbon and so on, the appropriate metrics, and we've developed pathways to monetizing them. What should be the price of a ton of carbon? Which in our case is $300 a ton. Now, if you look at these 1,800 companies' data now, you see the world in a completely different way, don't you, Jennifer? Mm-hmm. You see that 250 of these companies deliver more environmental damage in a year than they do profit. Yeah. That a third of the companies deliver environmental damage equivalent to 25% or more of their profit. That altogether they deliver $3 trillion a year of damage. And then, very significantly, when you compare the damage they cause to their stock market valuations, you realize that there's a correlation already in several sectors where impact data has been flowing more regularly, perhaps, than other sectors. So that the companies polluting the most are the ones that are worth the least relative to their competitors. So you take a company like ExxonMobil, which has doubled down on fossil fuels, as you know. Its market cap 3 years ago was 500 billion. Today it's 130 billion. Now it delivers $39 billion of damage a year from its operations. And you compare that with Shell, which is bigger. Shell delivers 23 billion a year. And compare it with BP, which is about the same size as ExxonMobil, it delivers 13 billion. So even in the fossil fuel industry, you see investors realizing that these companies that are creating environmental harm are actually in danger of regulation, taxation, losing talent, and losing customers. Now, the answer to your excellent question is, it's being driven today by investors. And investors with the scant information, very general reporting, rather the financial reporting of their impacts, investors are using that information in public and private markets. And to the extent that this information is price sensitive, regulators are going to have to step in. Regulators is governments, right? They're going to have to step in to make sure that every investor has access to this information. And it's not just the big investment managers that know to go to the Harvard Business School site or other sites to find it. So it will eventually become impossible for regulators not to step in. But I am hopeful that, as happened in the early 30s, when again, many of you won't be aware that we had no transparency really on profit. Every company picked its own accounting principles. There were no auditors to verify the numbers. And people argued then that it would be impossible to have a single set of accounting principles for companies irrespective of their size and sector. And of course, we know, looking back, that it's that application of accounting principles across the world which has enabled investors to make their decisions on the basis of reliable information, which has led to an explosion in the size of our markets. I believe that the Biden administration is in a similar position with regard to impact transparency today. And if the Biden administration really is sincere about its election platform of improving society, racial inequality, and so on, and the environment, then I believe that it should seize the initiative, just as the Roosevelt administration did, to bring about the publication of impact-weighted accounts. Now, you asked about the EU, and you're right. The EU could well be another body that leads in this area. It's been, especially through the Trump years, way ahead in anticipating that this type of measurement is going to come in, albeit only in the environmental area and not monetized for now. But it could be, or it could be that some individual countries in Europe, the UK could well be one. The UK's been a leader in this impact space. Holland has been another country, several Scandinavian countries, New Zealand. Another country will lead. But it's a combination of the two. It's a combination of investors using this money, regulators, which is government, becoming aware of the fact that they have to step in, and governments giving them the ability to step in.
You know, what you're really talking about is the economic term of externalities. You know, you're actually asking companies to account for the externalities and the impact they have, and, you know, move to a different direction of that, which for a long time, if they've created pollution or there are other side effects or long-term effects, even short-term or long-term, of companies' production, it's sort of been, well, that's an externality, that's not a part of our accounting. So that's fascinating. The one example you and I have talked quite a bit about that has been a success model when we get to vehicles. So yeah, we came out of the financial crisis in 2008. Lo and behold, microfinance did extraordinarily well, surprised everyone how resilient the people paid back their loans. It did social good as well, but even from a pure financial instrument, a lot of people found it quite attractive. We've had the IPOs of SKS and Compartanos, and that sort of, in my view, led to like this renewed interest in impact investing, doing well and doing good. You and I have talked about recently the success of something that you really started out of the UK with the Peterborough bond experiment and looking at social impact bonds, and that our mutual friend Tracy Plangens kicked it off in the US. Can you tell us a little bit about why first of all, there's over 200 worldwide. Why do you think that mechanism is working so well? And how does that sort of lay the groundwork for the future of how we think of how these mechanisms can do well and do good?
So when I set off in 2000 at the request of the government to look at how can we improve the way in which governments deal with poverty, I tried to find a way of connecting the activities of social entrepreneurs running non-profit organizations to the capital markets. And the social impact bond, 10 years later, is something we invented, which in retrospect, you could say, optimizes risk, return, and impact, which is, again, a central proposition of my book. Because the return to the investor from funding a charitable organization comes in the form of a payment from government or philanthropist according to the improvement achieved. And as you correctly referenced, Jennifer, the first bond aimed to prevent young prisoners from going back to jail. And we reduced the number going back by 9.7%. And the investors got their £5 million, $7.5 million in those days, back with a annual return of 3.1%. The reason the social impact bond is important is that coming out of COVID, the most vulnerable are going to be hit the hardest. And governments are going to have scant resources because of the massive amount of national debt they've all taken on their balance sheets. So they're going to face an increase in unemployment, in homelessness, in health issues of different kinds, in kids dropping out of school, as you were saying, and perhaps not going back. And it is vitally important, therefore, that capital flows to charitable organizations, but businesses too that are purpose-driven, impact businesses, if you like, to help governments achieve their goals of helping the most vulnerable through. Now, what you find when you launch a social impact bond and start working with it is it focuses the attention of the social entrepreneur on specific targets, which leads to generating the data. For instance, before the Peterborough bond was launched, we didn't know that 42% of these young people left prison with a drug habit, that 38% or so, from memory, didn't have a home to go back to. So then you begin to understand why a drug dealer meeting them at the gate and saying, I'll give you a place to spend the night and something to forget all this, and put you back on your feet, given that these young people only had the equivalent of $60 in their pocket to get to the next paycheck, which may be a month, So it focuses on data, it focuses on achieving objectives, and it focuses on delivering innovation to achieve better results, to help more prisoners or to help more kids not to drop out of school. Because if you establish that track record, you can go back to investors and say, hey, look, I helped so many thousands of children or young people. Will you double up this time, like a business? And they said, the £5 million raised 10 or 20 or 50 or 100. We're actually working on $1 billion effort in education in Africa and the Middle East.
So I love that.
And separately in India.
So just to kind of explain the mechanism a little bit to people, private investors put up upfront risk capital. The social finance bridges together the best of the best for outcomes motivation, and in the case of prison, so people don't get reincarcerated. Looking at a variety of services, like you said, it's housing, it's education, it's healthcare, it's maybe substance abuse, it's maybe family support, it's job training, and they can put together this potpourri of things that help reach the outcome, which is that they don't go back to jail. And if you're successful, the investors that have the risk capital got their money back. They may have just given that to charities anyways before, but they get some capital back to reinvest. The government has no risk in the model. They get improved rates of productive people in society. And so it kind of creates this win-win model with a focus on outcomes instead of all these separate nonprofits being, well, I did this one thing and I did this one thing, and nobody's interconnected to know the outcome from the individual's point of view.
Right.
Great. I just wanted to say that just to explain it, and it's interesting to see how successful you all came up with this model and have proven it in the UK, in the US, and now around the world, right? You have development impact bonds around the world.
Yeah, there are now 206 of these in 30 countries dealing with 14 different social issues. Interestingly, the basic idea came from two 30-year-olds working in the social finance team in the UK in the basement of my office where I co-founded it. And young people are driving this revolution, Jennifer. They're driving it through their innovation, through the ventures that they create, and through the companies they join and so on. And young people are going to drive the disruption. Take a company like Tesla, Jennifer. Of course, Elon Musk wasn't a millennial when he started, but he had millennial ideas. He didn't enter the automobile industry because it was an easy industry to make money in, right? Like a very old established industry with entrenched leaders. He entered it because he wanted to shift it away from the combustion engine and create an opportunity to make money at the same time, risk, return, impact. And today, Tesla's worth $800 billion, worth 5 of his competitors combined. General Motors is worth $40 billion, okay? And so I think young people are going to do what they did with technology now. They're going to use technology and impact thinking to devise business models like the social impact bond as an investment tool, but in this case, businesses, that the more they deliver impact, deliver profit. And it'll be in almost every field. It'll be in education, it'll be in health, it'll be in food, it'll be in consumer products, it'll be in clean energy, it'll be in almost every field.
So I have one last question, and then we're going to open it up to questions from the audience, and we're going to be using Slido for that. So hopefully all you guys know where the Slido is. It's in the chat where you can post questions. So we just started talking about this with Tesla, but one of the other really important additional concepts you talk about in your book is the role of social innovation. And you give examples of Zipline using drones to lift medicine into conflict zones, Mobileye to create driverless cars so the blind, are not disadvantaged and being ride dependent. And recently Orcam, that enables reading and facial recognition for the blind as well. We as universities care a lot about social innovation, and the faculty director for Impact, Maggie Delmas, is also on this call, and she has a cross appointment with the Institute of Environmental Science. It's something that we've talked about, that we look at. It's how do we make sure we support the students that are motivated for businesses, again, that want to do well and do good. And a lot of entrepreneurs, as you said, are motivated by positive societal change. It's not all money-based at all. It sometimes comes with it. What do you think universities can do more to really breed this social innovation? What are some of the necessary things that need to happen from some of the social startups that you've seen?
So I'd like to ask you a question after this, if I may.
Sure.
I think universities are crucial, and business schools in particular, because it's in business schools that this new thinking gets developed, refined, and implemented. And actually, the effort behind my book, which, as you'll see, is not a book about me, it's a book about the impact movement. It draws on my experience, but it's a book about the impact movement and impact thinking. All of the royalties are going to impact charities. The e-version is available for $2.99, so every one of you can afford it, hopefully. The effort behind my book has concentrated in part on business school webinars like this one. Mm-hmm. And I think if you look at what's been happening among faculty members like yourself, I recently spoke to a group of faculty members teaching impact. The curriculum has changed. The students are participating with very high percentages, 40, 50% of the students are participating in these impact-centered courses. And we haven't yet refined the way in which you optimize risk-return impact best. What is the framework that you use? And obviously, monetization is a tool for measuring it. But how do you use an impact lens to detect new product market opportunities, such as the one I describe in Orcam, where there's a device that was designed for the blind, whispers into their ear, a pair of spectacles, whispers into their ear the page of the book they're reading, or the newspaper, or the banknote, gives them independence, the ability to connect to the outside world without an intermediary. But if you look at it from an impact point of view and ask the question, how can this technology help the greatest number of people on the planet, you get a surprising answer, which is, what if you provided these spectacles to the 800 million illiterate adults in the world? And now you have a $1.1 billion market. So business schools have to concentrate on providing the tools for this generation of entrepreneurs to understand the product market opportunities that are offered through impact thinking, which is vastly increased sizes of markets at lower price points using innovative technology.
Yeah, and I think that's one of the opportunities is to look at when you look at some of the hybrid business models, and are there more creative mechanisms to fund and then underwrite some of the deployment of these technologies, right? And we're now starting to see what was originally a one for one model. That doesn't really always make sense. It's almost too separate. But how do we have these blended models for looking at distribution of these products? And I just thought you did so many compelling ones that you mentioned in your book that are clear examples of transformative technologies for people.
And so if I may ask you a question, do you see a change in the student in student thinking, in student interest in these in these ideas, in participation in impact courses? Obviously, you've created a fund, which is wonderful, but do you see it in the day-to-day academic life of your university?
Yeah, and it mirrors somewhat what we're seeing actually happen in some of the corporations that we're talking to as well. And that is that, we have an impact center that's very vibrant. We have a series of courses, but what I believe our students really want is to talk about impact in all of their courses. And so how is it just going to the impact classes, or have we now sort of moved to second or third generation where we want impact in all of our classes? And it's still not appeal to every single student, but every single student wants to be exposed to it. And so it's sort of been a challenge for us to work with faculty to talk about how to integrate that more in the curriculum, to make sure that we have the cases available for them to use in the curriculum. And I do think you're seeing across the board that interest that they want to have, that sort of blending when they look at their careers, as you've spoken about, the Cohen example, the Cohen and Cohen, about people want to work for companies that have mission, people want to invest their money in places of mission. People want to go back and get their degrees where they have a mission orientation too. And it used to be, being in this field now, for 15 years, that it was sort of this do-gooder, tree hugger tranche, and it's not, I don't think that's the case anymore. I think it's much broader than that. So the biggest challenge for us is to keep up and make sure we supply that material for our faculty too. Many faculty at UCLA are very committed to these topics. They want to move things in that direction, and how we have some kind of common language to bridge and talk about that. So I am getting some great questions coming in. And so I'd like to, if it's okay with you, go ahead and read some of the questions that I'm getting. Some of them are really revolving around the standards. But I want to go to one first that is kind of going back to the political sphere a little bit. The question is from Fernando, is actually from Ashley, is what should we be asking our elected officials? And if we really want the government to be sort of a point of, enacting change in what's reporting and transparency, how can we create some collective action to make sure that happens?
We should be saying to our elected officials, transparency on impact is a human right, and we want you to mandate that companies have to provide it.
And is there a role, this question comes from Sanjay, there's quite a few billionaires that also can drive collective action. Actually, we've seen this happen over time. We've seen, the movements to giving half of your assets away. We've seen some of the impact that can happen when that initially happened. How can some of the wealthiest 1% also drive some of this change?
So the high net worth individuals, up until now, have tended to look at their careers in terms of you make money, and then when you've made enough, you begin to give it away. And the change that is involved here is in saying you can have a career where you make money and you do good and you continue to give money away in the traditional sense, because you'll be even more successful. Again, it's one of the core messages of my book, that you can be even more successful by optimizing risk-return impact than just optimizing risk-return. And we're talking about ExxonMobil. So the older generation, the generation of your parents, most of you on this webinar, can really help us by funding this movement to reshape capitalism. We need systemic change. We can't deal with the environmental and social issues we face by tinkering at the edges with philanthropy. And many of these high net worth individuals have still not shifted away from the idea that they should give the money away in order to be generous, that they can be more generous more effectively by investing in social impact bonds through their foundations, if they like. Actually, they can do it through the grant program as well as through the endowment. Both are legally acceptable, than just by giving money away. And there's a whole chapter, as you know, on impact philanthropy. And I would love to get the high net worth Silicon Valley set to connect with this idea and to really do something about it. Because unless we fix the system, we can't deal with these challenges.
Yeah, this is a really important point you're bringing up, is that a lot of family foundations sort of had their 5% that they gave away and their 95%, and I would say even with my husband and my foundation, we were guilty of this. I found something in that foundation, an investment scheme I felt very uncomfortable with. Upon reviewing, said we were not going to invest in these type of companies. But to turn it on its head, you can actually invest, you can use that 95% to invest in, mission program related investments and other investments and that's a huge amount of capital to put to work, as opposed to just the capital that you give away.
Totally. I mean, the way we should be looking at our endowment portfolios of foundations today is everything should be delivering positive impact. It'll do better. It'll give better financial returns, and it's in line with our foundation's mission. Everything in public markets should be ESG. Impact investment, where you measure the impact accurately or dependably, is about $1 trillion today, out of that 40 trillion of ESG money, or compared to that 40 trillion of ESG money. That, by the way, is equivalent to the size of the whole venture capital pool globally today. So it's a lot bigger than microfinance, which got to $150 billion or so. It's much more pervasive. But what I want to say, Jennifer, is if you think about it, if you bring impact-weighted company accounts to investors, then all investment becomes impact-driven. Those who choose to ignore it will be like those who refuse to see technology coming. Those who were retailers and thought that technology would never affect their business, would be a case in point. So every endowment today should be ESG and impact. Impact private equity, impact venture capital, impact infrastructure, impact real estate, green bonds, social bonds, blue bonds, and so on in your bond portfolio. And by the way, it's the only way we're going to achieve the social development goal, the sustainable development goals. There's a 30 trillion gap that we need to fill to achieve them by 2030 or so. Where's that money going to come from? It's not going to come from governments. It has to come from financial markets, and impact is the key to that. The only way, Jennifer, that we can achieve the SDGs is through this impact movement. And that's why it's not surprising that UNDP, the United Nations entity, which launched the SDGs, now has an area totally focused, an effort totally focused on impact measurement.
Yeah, and we saw also, John Goldstein, who you mentioned in your book, and we both know, when Imprint Capital used to be a private advisory firm, it got bought by Goldman Sachs. And now within Goldman Sachs, it's flourishing because, the sense that I have, and I think you share this view, is there's not lack of demand or interest from the investor side. There's sort of this gap we have right now, this information gap in all the wealth managers and all the people within those funds being educated and having the tools, and then sort of understanding how to do what they traditionally do, which is understand the risk associated with different asset classes, what people's objectives are, but greenify that so that information is available across mechanisms that can do well and do good. And how we speed up that information gap is, of course, offering programs like we do with our AVIP programs and other programs and things that we offer here. But there needs to be some collective engagement from the investment banking. I do think it's getting better, though, from going to SOCAP, the conference over the years. I used to be kind of surprised when I saw somebody from an investment bank there, a wealth manager. Now you're seeing a lot more people. And if anything, there just appears to be this huge education gap we're trying to address.
Yeah, absolutely.
So one student had a question that's a little bit, take it on a slightly different path than some of the questions we've talked about today. And that is talking about the concept of the people that are left behind. And that's kind of the core of the case that Laura and I wrote on Bridges and Bridges US, is sort of what happened with phenomenon of the last administration with Trump and with Brexit, and the fact that we had these 20 to 40-year-olds for the first time that had a mismatch of their skill set, like coal and other industries they're trade for were on the descend, and decline. They didn't have other places to go, and they were unemployed at a very young age, which meant they were likely to be unemployed for a very long time. Not good for society, not good for mental health, not good for personal empowerment, many, many levels. And what you guys did with Babington and a variety of these, can we talk, if we don't mind, going to the other side of the hat a little bit in some of the private equity mechanisms you've done with Bridges? How has that been important, to kind of look at partnering with government and how we need to address against society by investing in some of these organizations that can do retraining?
There have been hugely important efforts. I was privileged, again, in the basement of my office in Portland Place in London, to co-found Bridges in 2002, nearly 20 years ago now. And Bridges today manages over about $1.5 billion. Now, Bridges has been hugely important because it's shown, and by the way, it was started with government investing 50% of the money in the first Bridges fund in 2002.
Right.
And what Bridges has shown is if you put on an impact lens and try to optimize risk-return impact, you deliver market rates of return and you deliver measurable social good. In fact, we discovered, Jennifer, that while our mission was to invest only in the 25% poorest parts of the UK, in fact, 90% of the money went there. 90% went to the poorest 10%. Why? Because you discover that there are bigger opportunities in areas that have been left further behind. There's huge levels of motivation from people who want to improve their families' lives, and talent is equally distributed across the world. And there are plenty of social entrepreneurs capable of building significant businesses in poorer areas. But the most important thing is perhaps this notion that if you do good and do well, it's going to cost you, because it's another effort at philanthropy, which Bridges was one of the first to explode.
Right.
And I think that when you look at the independent groups like Bridges, groups like Leapfrog, Avishkar, Double Bottom Line, Acumen in a different way because they're not looking for market rates of return. And then you look at the big established leaders of venture capital and private equity. In private equity, you see the biggest firms shifting to launch impact funds. KKR, Blackstone, Bain, TPG, Partners Group, sorry?
Yeah, Rise,
the Rise TPG Fund. Apex Partners, my old firm, is launching a significant impact fund. Apollo have announced that they're launching an impact fund. The private equity industry has got onto the bandwagon. The venture capital industry, interestingly, hasn't quite as much, despite funds like DBL, which invested in Tesla and SolarCity. But Kleiner Perkins, more than a decade ago, started to invest very heavily in environmental. It turns out that they were ahead of their time, in retrospect. Over the last year, the price of Tesla has multiplied, the stock price has multiplied 7 times. Clean energy indices have multiplied between 2 and 3 times. ESG outperformed normal investment, And so what we have today, Jennifer, is Silicon Valley, where you guys are, you're close to Silicon Valley, where you're located, is behind in the game. And we need to bring awareness to it. That's why I think the book is so important, because the book explains that there's an overarching vision centered around taking our economies to optimize risk, return, and impact, that it's likely to deliver better returns, not lesser returns, if you do that. And it's the only way we can meet our social and our environmental challenges. So if we want capitalism to be sustainable, we have to reshape it. And the venture capital industry has a major leadership role to play in applying these very powerful technologies to which I referred, to improve people's lives at the same time as making money.
It's so interesting because sometimes corporate behavior is changed through activism. You see the fair trade movement, or coffee farmers not being paid, or different environmental atrocities. But then when corporations sort of take a deeper look into their supply chains or look into some of their practices, they realize they have a problem. They realize if they don't treat their workers well, they won't have farmers. They won't have enough supply. Their expenses will go up. There's some real business reasons they should be having a longer view as well.
Yeah, so let's take the example of Apple and Costco and the diversity in their workforce. The Harvard Business School Impact Weighted Accounts effort will be publishing soon the employment impact created by several thousand companies. But it already published, as an example, a sample of a dozen companies, including Apple and Costco. Now, if you look at diversity, if you measure the extent of it and compare it with the demographics outside of Apple's facilities, there's a gap. And then if you look at the advancement of minority employees, there's a gap too. And in gender pay, there's a gap. Now, if you tot it all up by ascribing the salaries that missing people from these communities would have received, it comes to $2.7 billion against a $10 billion wage bill, which would all be positive impact, you'd hope. Yeah. Now, Apple has 80,000 employees. Costco has twice that number. You do the same sum for Costco, and it comes out at $1 billion negative charge. So Costco is many times more diverse than Apple. Now, as you say, Apple is going to have to ask itself, how are our consumers and our talent going to judge us on this? If investors begin to require us to have a transition plan for not just for zero carbon, but also for closing this gap because of all the inequalities that a lack of diversity creates, how are we going to progress relative to our competitors? And so we've moved the goalposts by measuring impact of a company. We've moved the goalposts for management, exactly as you were saying, away from just making money to making money and delivering positive impact. Now, some companies can deliver positive impact through their product. Some people can't. Some industries don't so much. Although it's quite rare to find industries that deliver no impact from their product. Every company delivers employment impact. And many industries, through their operations, deliver environmental impact, which they can reduce considerably: water usage, carbon emissions, sulfur emissions, and so on and so forth. So you move the goalposts for business. And we've seen, if I can refer to it, we've seen shareholder rebellion start. There was a rebellion at the Procter & Gamble shareholder meeting just a few weeks ago, where 2/3 of shareholders voted against management because of what? Because of deforestation caused by its use of palm oil, Jennifer. And we're going to see these rebellions spread. They're going to spread to social issues too. And the next frontier in stewardship, I believe, is going to be the publication of transition plans by companies. And if they don't publish transition plans, companies will disengage with them. Investors, forgive me, will disengage from them. Investors will continue to engage with companies with transition plans and push them and help them and accept that they have to invest in order to achieve them. But they won't continue to engage with companies that double up on fossil fuels like ExxonMobil.
And I think just before this call started, one of our AVIP co-presidents, Devesh Shredder, just talked about GameStop and what's happening there with people being active in purchasing shares directly. And so if you take this activism and look at it, how you invest your money, and the fact that millennials are getting older and more able to have their market power manifested through their investing decisions that could have a huge impact.
I will send you in the next few days a very short minute or two video that's all about the impact revolution. And I would like you to try to make that go digital. Okay, viral, forgive me, to go viral. Because if people understand this basic principle that our system can change if we measure the impact of companies, then government will act sooner, coming back to the question you were asking.
Last question I have is driven by Ari Cohen, and it kind of wraps up to where we started in talking about the impact of COVID and how we sort of, we're still in the middle of this. So I don't think we really know the impact this has had on us with education, health, and so many other factors. But, you talk about the fact that governments releasing data is key so that people can then be able to first understand the gravity of situations, and secondly, understand what mechanisms they can put in place to achieve some outcome and turnaround. And perhaps COVID is an opportunity to sit back. This thing happened. We're not here to point fingers, but it happened. How do we rebuild from here? You speak about the fact that the UK has begun to do that, begun to release some data, so you can put mechanisms in place like social impact bonds. Can you just? I know we're almost out of time, but can you just briefly kind of share what that release and transparency data will do and enable us to do?
Yes, if you do as the UK did 6 years ago, and you publish the cost of more than 600 social issues, the cost to the government of more than 600 issues. If you know that a prisoner costs you so much, a released prisoner who goes back through the law courts into jail costs you more, a homeless person costs you so much, and so on and so forth. You begin to create a market where social entrepreneurs can say, hey, I can help homeless people much cheaper than this cost. And so it enables the government to pay me for it, and I can make a surplus as a business or even as a charitable organization. So it's a crucial aspect of creating an impact market. And I want to recognize the fact that Ari worked at Social Finance US in Boston with your roommate, I believe, Jennifer, at college, Tracy Palanjan. And the use of the social impact bond for governments is a very powerful way to make sure that their expenditure actually goes to achieving outcomes. Because if government pays for it, then government only pays when the outcome has been achieved. So you need the data to be made available so everybody doesn't have to go out and try and reconstruct what they think the cost of a social issue. So
Tracy was a close friend, not a roommate, but she likes to call me her old friend, which I keep saying that just means we've known each other a long time, Tracy, not that we're old, right? So she always says my old friend, meaning we both kind of have grown up together for a long time. I would just want to close this talk with and this Q&A, and we again are so grateful for you joining us and having this conversation, as well as honestly, we're so grateful for all the work you've done for these years. You really seeded this space, you validated it, and in so many different ways with so many different instruments, and I think we all owe a lot to you. But you sort of closed your book with a few tipping points, and you sort of discuss how incremental improvements across multiple stakeholders leads to kind of a tidal wave of collective action over time, and we should all just kind of hold that near and remember, because sometimes when you're in the trenches, trying to do all these mechanisms, it can be very hard. I do remember actually when Tracy Palanjan launched social finance in the US, and it was hard to get that first bond done and to get this
very hard.
First momentum validation. So it's my favorite expressions. As a famous Chinese proverb states, a journey of 1,000 miles begins with a single step. Yeah. Thank you for showing us the way. so that we can all take those first steps and many steps together.
Thank you very much, Jennifer. Thank you all for attending. Onwards and upwards, and just let's lead this revolution to success.
And send me the video, and we will all collectively do our best to make that viral, right? Everybody listening. So please do send it us that way.
Wonderful. Thank you. Goodbye.